Hello and welcome back to Dukascopy TV. Today I'm joined on the line by Caroline Newhouse, Senior Economist at BNP Paribas, to discuss the economic situation in Ireland. Caroline, unemployment is a severe issue in Ireland. The rate currently stands at 14.8%. There are many people in their 20s waiting out the recession in Australia, New Zealand and Canada, but many are looking to return for work as they are not on permanent visas. What are your views on unemployment in Ireland?
Ireland, for the moment, remains one of the best performing economies in the Eurozone, not just the peripherals. Currently, Ireland's PMIs are solidly in expansion territory, with the PMIs for the rest of the Eurozone well below 50. So the deterioration in the labour market should come to a halt, with the unemployment rate currently flattening off at 14.8%, as you said. With the recovery gathering speed, let's say next year, unemployment is likely to fall back further, and we expect the jobless rate to decrease to less than 14.5% in 2013.
Caroline, you said unemployment will slightly improve next year, so clearly job creation in Ireland is looking more positive. Do you agree?
It's currently improving, in fact, but growth has stagnated this year, and it should accelerate next year with more job creation in some sectors, not in all sectors, as in fact we see only job creation in high-skilled service sectors, and traditional sectors such as construction, manufacturing sectors are still shedding jobs.
And in terms of investment, what is the situation like?
The flows of foreign direct investment have recovered this year because Ireland has still a very interesting position in terms of fiscality in the Eurozone, in terms of tax in the Eurozone. So foreign direct investment should continue to recover in Ireland, but when you look at domestic investment, there are still some. We will wait some time before seeing business investment recovering, and especially we'll have to wait to see housing investment recovering, as the housing market is just approaching its troughs now, and housing prices have not stabilized yet.
October witnessed the largest increase in Irish retail sales. What were the main reasons for this rise?
But it was quite surprising because household power purchase has been dented by rising prices this year, particularly in core items such as energy and unprocessed food. And also household confidence is slowly recovering, but it is still very much below its long-term average. Furthermore, in fact, households are continuing to deleverage markedly, and so they have not much money to spend. But probably, in fact, as the job market is improving very gradually, the unemployment rate is probably stabilizing, and also there is the prospects of falling inflation next year. Households have been spending some money for, let's say, now 4 months in a row.
Now let's have a look at the bond market. Ireland was effectively shut out of bond markets for 2 years. However, since the summer, the country has gradually been regaining investor confidence. What are your views on this?
Well, I think that Ireland now see its spread with the bond narrowing markedly during this year. It narrowed from an average of more than 700 points in 2011 to less than 400 points in 2012. So this trend of a narrowing of the spread between the bund and the Irish bonds should continue and slowly normalize. So at the end of 2013, we should see something around 300 basis points. So I think that Ireland will continue to successfully come back on the bond market to issue debt.
In terms of annual GDP growth, what should we be expecting for Ireland in 2013?
So this year, our forecast is for let's say zero growth, around zero in 2012, and next year we should see GDP growth around 1.5%. Ireland is a very open economy, so for now it has done quite well, and it was one of the best performing economies of the Eurozone because, in fact, it has some of its main trading partners outside the Eurozone. So the outlook for activity over the coming year will depend critically on how global growth pans out. So that's the big question mark about Ireland. If there is a double-dip worldwide recession, Ireland won't be an exception.
Ireland recorded a government debt to GDP of 106.40% of the country's gross domestic product in 2011. Can you tell me your forecast for government debt to GDP?
For 2013, we should see the gross government debt continue to rise before stabilizing in 2014. Next year, normally, gross debt to GDP ratio should be around 124%.
Thank you very much, Caroline. Well, stay tuned to Dukascopy TV for more updates and analysis. And don't forget to watch the weekly wrap-up tomorrow with Monica Gibson for a review of the week's events. Have a nice evening.